The financial world is holding its breath, gripped by a sense of uncertainty and anticipation that hasn't been felt in decades. In a move that has sent shockwaves across continents, China has unleashed a seismic $8 trillion divestment from Western markets, a sum so vast it dwarfs the GDP of many nations. This isn't just another market correction or a fleeting panic. This is a calculated, strategic withdrawal, meticulously planned and executed at the highest levels of Chinese leadership. State-owned enterprises have been ordered to liquidate their Western holdings, while the People's Bank of China is rapidly dumping U.S. Treasury bonds, sending ripples through the heart of global finance. The shockwaves are immediate and profound. Volatility surges, investors panic, and the very foundations of the global financial order begin to tremble. Markets from New York to London to Tokyo are thrown into chaos as traders scramble to make sense of the new reality. For decades, China and the West were locked in a delicate economic embrace, China as the world's factory, churning out goods at unprecedented scale, while the West played the role of consumer and banker, fueling growth with demand and capital. Now, Beijing is signaling the end of that era, weaponizing its immense financial clout to inflict maximum disruption on Western economies. This is not just an economic maneuver, it's a bold geopolitical statement. This dramatic move is a direct response to years of escalating trade tensions, tariffs, and Western sanctions. It's a countermove in a new kind of economic warfare, where money and markets are the weapons of choice. By pulling out such a massive sum, China exposes the West's deepest vulnerabilities, threatening the stability of pension funds, the value of stock portfolios, and even the strength of national currencies. Ordinary people, from retirees to small investors, suddenly find their financial security at risk. The era of cheap goods and easy credit, which so many have taken for granted, may be coming to an abrupt end. In its place, the world faces the prospect of a painful global rebalancing, with higher prices, job losses, and economic uncertainty looming on the horizon. As the dust settles and the world tries to make sense of this unprecedented event, one question hangs in the air. Is this the opening salvo in a new global conflict, one fought not with armies and weapons, but with balance sheets, capital flows, and economic leverage? The stakes could not be higher. The stability of the entire global financial system is on the line, and the decisions made in the coming days and weeks will shape the economic landscape for years to come. The world watches, waiting to see if this financial earthquake is merely a tremor, or the beginning of a much larger upheaval that will redefine the balance of power for a generation. History shows a four-stage pattern when rising powers challenge the old order. First comes economic dependency. The rising power integrates deeply, supplying goods and labor, creating mutual reliance. Next is accumulation. The challenger amasses the established power's currency and assets, gaining leverage. Then, repositioning, quietly selling off those assets, investing in alternatives, and building independent systems. Finally, controlled demolition, a sudden calculated move to destabilize the rival's financial system. Each stage is methodical, unfolding over decades, but the final act is swift and disruptive. Understanding this pattern is key to decoding today's chaos. The world's financial drama is not random. It's a playbook, and China is following it step by step. The question is, how far along are we? At the dawn of the 20th century, Britain's empire depended on German industry for steel, chemicals, and machinery. British consumers and financiers profited, believing deep economic ties made war unthinkable. But this dependency was a double-edged sword. Britain's reliance fueled Germany's rapid industrial and military rise. German exports funded a massive naval buildup, directly challenging British power. The illusion of mutual benefit blinded Britain to the threat. Its own prosperity was financing a rival's arsenal. Economic interdependence, far from guaranteeing peace, gave Germany the resources and time to prepare for confrontation. The lesson dependency can be a trap, empowering the very challenger it seeks to pacify. Britain's miscalculation set the stage for a devastating conflict. History warns, today's economic partners can become tomorrow's adversaries. Post-WMT Japan became an export powerhouse, flooding the US with cars and electronics and racking up huge trade surpluses. Japan used its dollar windfall to buy US assets, treasury bonds, real estate, even iconic companies. This accumulation gave Japan financial leverage, while the US grew dependent on Japanese capital to fund deficits and keep rates low. American anxiety soared as Japan's stake in the US economy deepened, sparking fears of lost sovereignty. The US response, the 1985 Plaza Accord, forcing Japan to revalue its currency and slow its momentum. The dynamic was clear. Japan's accumulation became a weapon, and the US had to act to regain control. The result, Japan's economic boom ended, ushering in a lost decade. Accumulation is never just about investment, it's about power. When the balance tips, the established power pushes back. The cycle repeats with new players and higher stakes. Russia's energy exports made Europe dependent, but after 2014, Moscow began a strategic repositioning. Russia sold off US treasuries, slashed dollar reserves, and bought massive amounts of gold. It built its own payment systems and forged new energy deals with China, reducing exposure to Western sanctions. By 2022, when sanctions hit over Ukraine, Russia's economic defenses were in place. The impact was blunted. Russia had unplugged much of its economy from the West. Repositioning is about building resilience before a break. Russia's pivot shows the power of preparation in financial warfare. The lesson: disentangle before the storm hits. The final stage is controlled demolition, a sudden, deliberate strike to destabilize the rival's financial system. This could mean dumping government bonds, crashing stock markets, or cutting off vital resources. The goal: maximum shock, minimum warning. It's not just financial, it's psychological, shattering confidence in the established power's stability. Once faith is lost, panic spreads, and a crisis spirals. The rising power is shielded by years of preparation. The established power is left scrambling. This is the financial equivalent of a first strike, ending the old order and forcing a new one. The risks: depression, unrest, and escalation beyond economics. Controlled demolition is the most dangerous act in the playbook. China's economic rise mirrors this four-stage playbook with uncanny precision, echoing the financial dramas that have shaped global history. The world has seen this pattern before, but never on such a massive scale, and never with stakes quite this high. Stage 1. Western firms, lured by low costs and vast potential, flocked to China. This created a deep, almost inescapable dependency on Chinese manufacturing, as supply chains and entire industries became intertwined with China's economic engine. Western economies grew reliant on Chinese factories for everything from electronics to pharmaceuticals, cementing China's role as the world's workshop. Stage 2. China's trade surpluses ballooned, flooding global markets with Chinese goods. As dollars poured in, China amassed the world's largest foreign reserves, recycling this wealth into US debt and assets. This financial loop not only fueled China's growth but also gave it a powerful hand in global finance, echoing Japan's rise decades earlier. This accumulation of reserves gave Beijing immense leverage over the West, just as Japan once had, but with even greater reach and ambition. Now, Stage 3. China is shifting strategy. It's selling US treasuries, buying gold, and building a financial fortress to shield itself from external shocks. This is a deliberate move to reduce exposure to Western financial systems and to prepare for future uncertainty. China is also creating parallel systems, expanding the Belt and Road Initiative, developing the CIPS payment network, and aggressively promoting the yuan as a global currency. These efforts are designed to bypass Western control and create new channels of influence, allowing China to operate independently if needed. Every move is calculated, aimed at reducing vulnerability and preparing for confrontation. China's leaders are playing a long game, anticipating challenges and building resilience at every level of their financial system. China is unplugging from the Western grid, just as Russia did with its energy networks, but on a far grander and more complex scale. This decoupling is reshaping the global economic landscape, forcing other nations to reconsider their own dependencies. The ultimate goal: insulate itself before the final act. China is building walls, both digital and financial, to protect its interests and ensure its survival in a world of rising tensions. The West's dependence, once a source of strength, is now a glaring liability. As China fortifies itself, Western economies face the risk of disruption and diminished influence. The stage is set for the most consequential financial conflict yet, a confrontation that could redefine the balance of power for decades to come. The world is watching, holding its breath, as the next move in this high-stakes game could change the course of history. China's $8 trillion divestment is a dramatic leap from gradual repositioning to the brink of controlled demolition. State-owned giants are liquidating Western assets, stocks, bonds, real estate, on an unprecedented scale. The aim: destabilize Western markets, repatriate capital, and strip the West of leverage over China. This synchronized sell-off weaponizes globalization, turning interconnectedness into a vulnerability. The impact: plunging asset values, evaporating retirement savings, and a looming liquidity crisis. Meanwhile, China is converting paper wealth into gold, oil, and strategic resources, trading financial claims for real power. The Great Divestment is China unplugging from the global financial grid, preparing to rewire it on its own terms. It's the final warning before a potential financial first strike. The West is left exposed, its prosperity now a target. The world braces for the fallout. For Western investors, the warning is clear. The old financial order, which has underpinned decades of prosperity and stability, is being dismantled before our eyes. The familiar rules that once governed global markets are shifting, and the sense of unease is palpable in boardrooms and trading floors across the world. China's $8 trillion move is not just a headline or a temporary market blip, it's a calculated strategic challenge to Western dominance. This is a deliberate effort to reshape the balance of power in global finance, signaling that the era of unquestioned Western leadership is coming to an end. The final stage, what experts call a controlled demolition, now looms as a real and immediate threat. This is no longer a distant theory discussed in academic circles. It's a scenario that could unfold at any moment, with consequences that will ripple across every sector. When this trigger is pulled, the fallout will be catastrophic. Asset prices could collapse overnight, investor confidence may evaporate, and the supremacy of the dollar, the backbone of the global economy, will be called into question as never before. The aftermath could bring hyperinflation, soaring interest rates, and a deep prolonged recession. Everyday life will be affected. Rising costs, job losses, and economic uncertainty will touch millions, not just investors. History's precedents are grim. Time and again, dependency on a single system or currency has ended in crisis. But the scale of today's interconnected world means the impact could be far greater than anything we've seen before. The coming storm will force a painful global reset. As the rising power asserts itself, the world will be forced to adapt to new rules and new terms, negotiated under pressure and uncertainty. Old investment models are rapidly becoming obsolete. Diversification within Western markets, once considered a safe strategy, may offer little real protection in this new era of upheaval. Understanding the four-stage pattern of financial upheaval is no longer just an academic exercise, it's a vital survival tool. Those who study the past and recognize the signs will have a critical advantage. China's methodical progression through this playbook is the key to anticipating what's next. Every move is calculated, every step part of a larger strategy that is unfolding in real time. The storm is coming, its signs are everywhere for those willing to look. Only those who can see the pattern, who can connect the dots, will be ready to weather what lies ahead. The time to prepare is now. Waiting for certainty is no longer an option. Action and awareness are the only defenses against the coming storm.